Good morning, good evening, good afternoon. Welcome back, gang. What a start to the week, man. Bitcoin has just not done really too much. Nice little recovery to the upside. But the sentiment is very interesting, to say the least. We're getting rate cuts, aren't we? Well, according to some Fed speakers, given that the week before last, we've had such fluctuations in the Fed watch, which are telling us that investors just don't know what's going to happen with these interest rate cuts. I mean, before we get into it, what's good? I hope everyone is doing well. Mad love and respect. Tantino. Yes. There is love there. Thank you so much for the name. And we've got a lot to talk about today. Usually on a Monday, what I like to do is just break down where we are in the marketplace. What can we expect moving forward? We do have a week filled with a little bit of data. We're getting unemployment claims this week. We're also getting the CPI data this week. But again, it's not really giving us the full picture, which is really the problem that a lot of investors have. What are we going to do? Are we going to get the cuts or not? $7 trillion sat in the money markets, humming and ahhing as to whether or not they should actually start taking on risk. We've got hedge fund managers saying now's a good time to buy because these pullbacks are really doing good. We've also had good news for Nvidia. Nvidia might actually be allowed to sell their H200 chip. I think it's the H200. But they might actually be allowed to sell that to China. And then China's trying to do something to Russia, and that's not looking good. So what's the story over there? But we'll talk about that in a few moments. But firstly, ladies and gentlemen, mad love and respect for passing through. I'm going to break everything down that you need to know. This is a very critical point right now in the market, of course, for cryptocurrency. I know all of you are throwing out the idea of altcoin season and what have you, but I'm just going to break down the logic so you've got an understanding of how to really approach this when you cut out all the noise, cut out all the BS. Even if you think that I'm speaking BS, it's irrelevant because no one is right and no one is wrong. What do you want me to say to you? Anyways, with that being said, let's get with the program and break down exactly the madness that has been unfolding over the last 24 hours or so and what's going to happen next. Here we go. So it says here that stocks stage a comeback at the end of a jittery week. Yes, it has been a jittery week. The article goes on to talk about what's been going on. And we've seen that there's a little bit of flavor coming into the marketplace. Just a quick overview of where we are with the futures markets. And as you can see, ladies and gentlemen, Bitcoin is the top performer. Look at that. Bitcoin is up there with platinum, palladium, lumber. So, you know, if you ain't kicking it with the Bitcoin, start getting involved in lumber, ladies and gentlemen. And we've got the NASDAQ coming in at 0.8387%. You can see the DAX is up there. Coffee's trading relatively well, but that's only because Trump and his tariffs on coffee and bananas and yeah, I mean, it's an absolute joke, isn't it? The main losers are natural gas, heating oil, orange juice, and lean hogs. All right, but we've seen a little bit of contraction in the yen, which is a very interesting story. God forbid I talk about the Japanese yen, given that the yields of the yen have pulled back. Hold on a second, Bitcoin holding out right there. Let's go over and have a look at the yen for a second, because of course we've got to pay attention to that. And before anyone says, "Oh, is he mentioning this again?" we need to pay attention to it. 10-year yield has started to pull back ever so slightly. Still talking around the 1.78 zone. It's still relatively high. We've also got the dollar yen showing us, where is dollar yen? Here we go. So we got the dollar yen coming into a flavorsome retrace, which could lead to a continuation to the upside, but we are heading into very tricky territories. The Bank of Japan have pretty much said that they are going to increase the interest rates. And if we go back in time and look at when they announced that they were going to increase the interest rates, that was on the 31st of July, but the market didn't really react. It was on the 5th of August that it started to actually initiate the move to the downside, where it happened on a Monday where it just slumped. But then equally, the recovery came in, which led to a significant recovery to the upside. Remember, the carry trade is going to put a lot of investors in a compromising situation. So it will lead to a volatile move in one instance, but that volatile move is going to equally lead to a just as bigger recovery back up. The faster they spend, or should I say, the less time they spend moving prices of assets to the downside, okay, the easier it's going to be when they start to make the recovery back up. It's when they do a slow bleed, where it keeps investors in the belief that, okay, DCA, start buying as prices are dropping. I get all of that, okay? But it's when they move down so fast where they are effectively pricing in whatever instance is causing the market to drop. So that is something that we've got to take into consideration. Going into it all, this is the big story right now. FedWatch is showing us that the interest rates are looking to get cut in December. You have had speakers across the board, whether it's Williams, Waller, Barkin, Goolsbee, they're all coming out with different stories. They started off the week last week saying that we really didn't favor a rate cut. Now, all of a sudden, they're looking at they want to give the rate cut in December. So this is what you're seeing right here. Now we've got bets at 73.5% suggesting that investors are anticipating that in 16 days' time, we're going to get a rate cut. And that's going to put us in the range of 3.75% for the interest rates. That'll be good news because right now, it's the UK that are currently at the high spot with interest rates. If we just go here and you can see right there, top side, you've got pound charging effectively 4% on the central bank rates. The dollar itself is coming in second at 4%. And if we do get the rate cut, that will put the dollar looking at a very lucrative spot for investors across the seas. But then that's, of course, going to then lead the yields on the dollar to be lower, which means investors are then going to have to transition their thinking in the sense where, okay, if the money is going to be less in yields on the dollar, we then need to start going places and taking advantage of rates that are lower so that we can take that money and start putting it to work. Now, you would assume that that would be the yen and that can also be the euro. But what a lot of investors are trying to navigate is the market overvalued? And if that's going to be the case, are we going to park our money in yen and generate a return on the yields there? Are we going to park our money in euro and do the same thing? Or are we going to take our money, convert it into yen and to euro, use those currency pairs to go and buy stock? It all depends on how they're going to navigate it, but the interest rate cut is going to give investors everything that they need to understand where we are going to be in the next quarter. Now, with that being said, going over to the stock market to understand where we are with everything, you can see here that we have got some important information. Coming into Friday's action, we saw 1,099 stocks rise on volume, okay? And then we saw only 118 stocks down on volume. Now, this could give us the idea that the market could be exhausted in the sense of selling because it has dropped down pretty aggressively. Quickly going over to the NASDAQ to put it into perspective, look at this. This is absolutely wild. With the move to the downside, I'm going to sneeze. And now I'm not. And then you've got this big pump happening on the Friday, which did serve the marketplace very, very well. So when you see things like this, there's stocks above on higher on volume, then that's a good reading right there. Nearly 1,099 stocks, man. That is wild. Now, with that being said, the distribution days have effectively not been included yet, but the stock market advice for market surge is suggesting that you should only have around 0 to 20% exposure. So if you do have a portfolio, you really only need to be putting 20% of your capital into the marketplace, because now it would then be on the assumption, based on market surge, that we are in a corrective phase. So let's just break down that logic of the market being in a correction. Going over to here on the daily time frame for the NASDAQ, and this is going to serve us understanding whether or not cryptocurrency is going to make a move, which is what I'm going to talk about very shortly, because we've had some activity on the old BlackRock. No, not BlackRock. The clients of BlackRock. I'm fully aware of that. Anyways, so NASDAQ has broken a critical moving average. Just to look at it, one would be of the assumption, as I said earlier on, the faster they do things, the more information you're going to get about what they're really trying to do. Look at the speed of the candlesticks, not the speed, but so much the length of them, and how often we are seeing sell-offs. It looks like a very concentrated sell-off. If you take another sell-off, look at this. This right here looked like it was more of a controlled sell-off. You got drop, then it dropped, and it dropped, and then pulled back a little bit more, and then it continued, and then it slumped because of Trump and the tariffs. But this right here, it looks like a brutal sell-off. However, it's a controlled sell-off, in my opinion. Now, when we take that logic and go over to the idea of sentiment, you can see that smart money. If we look at the blue line over here on the right, you would look at it and say to yourself, okay, if the blue line's going up, it means that smart money is effectively buying on the drop to the downside. So once we hit an extreme on the smart money chart, then that's going to help us understand if smart money is at an extreme of how much buying they've been doing, which would be when prices are pulling back. As it stands, it looks like they're buying as prices are going down. They're getting things on a discount, okay? So we've got to pay attention to this. And obviously, as we see this blue line, as long as it goes up, the market's going to come down. And if it comes down, then the market is going to retrace. But sentiment for the retail trader is about to hit an extreme. So once it starts going in towards this dashed line on the right here, then we can assume that the retail trader, he's getting smacked. And he's upset about things. He's in capitulation. He's losing his brain. He's going on to X and complaining and crying and doing all of that. That's pretty much a buy signal, okay? So that's something that we've got to take into consideration. Going into the market itself, looking at volume, given that the NASDAQ last week didn't really have that much of a problem making the recovery back up was on volume below average. If you look at this red line here, it is coming in below average. But what we need to see happening is the stock market locking in days on volume above average. And of course, they are deemed as accumulation days. And if we see accumulation days coming into play, then we could be on the assumption that dip buyers are stepping in to try and see the narrative of prices going back up, because everything would technically be deemed as overvalued. But when we actually look at the bigger picture of things, look at Nvidia. Is Nvidia overvalued? It just doesn't seem to go down. All right, they had their earnings and price pulled back, but for me, that was it was just a bid move in the sense where sellers have been coming in, getting rid of their stock, and then of course buyers are stepping in, picking it up on the discount. So as long as they do come through with this Nvidia chip, and they're allowed to sell that in China, then Nvidia is only going to make the move up. If you consider what's been going on in the marketplace with the inconsistencies of the interest rates being cut or not, and where we're going to go into a holding cycle for a little bit, you can appreciate that Nvidia is actually doing very well, which is proving to you that the resilience of AI in the belief and expectation that the money, or the CapEx, which is the capital expenditure that investors are, or should I say companies that are putting to work, they are expecting rates of return in the future. That's why you're seeing Nvidia consolidating. It's not going too far up, it's not coming down, but it's stuck in a range, and there is a lot of accumulation happening inside of Nvidia. Now, just to break it down, you may not be aware of it, but oil prices are starting to bounce after sharp losses. There is the Ukraine and Russia peace talks that are coming into play. So that means that if you are in the market, keeping an eye out on that really is going to help you understand if the market is going to be favoring the narrative, which is we're going to hopefully get a rate cut. But if there is any developments regarding this story that could actually compromise it and nothing comes through, then the market is just going to go back to what it does, maybe try and pull a sell-off. Oil's going to rise up. Investors are going to seek commodities as safe havens. And then you're going to be back to the idea of, are we going to get the rate cuts or not? In other words, the market is driven so much by macroeconomic data that we ain't getting and the full picture of, and of course, any news announcements that are actually impacting investors' sentiment to say, yep, that's a good thing. Oh, that's a bad thing. Speaking of data, right here, this week, we have the core PPI coming out tomorrow, which has been projected from September's reading as minus 0.1%. That's good news. If the idea of prices are coming down, then that means inflation looks like it's going to start pulling back. But a lot of the Fed speakers have been saying that that's not the case. They're concerned that inflation is still sticky, but their priority right now is the labor market. If the labor market is contracting, then the economy is going to be looking like it's going to contract. But last week's non-farm payrolls gave us a different story. 119,000 jobs came into play, completely blew everyone out of the park. So now the Fed's like, hold on, we need to actually hold off on this rate cut. We need to just sit tight because the economy is not really showing strength. But at the same time, they turned around and said, we don't have the full data. We're not going to get any CPI or inflation data for October. So how on earth are you going to make a projection that the market is sustaining itself, or should I say the economy? Now, with that being said, earlier I mentioned about China. This is really interesting here. It says here, Chinese exporters charge Russia more for war supplies as sanctions bite. So hold on a second. You're trying to set up bricks, but at the same time, you're charging Russia more. And what's going on here? And what I think's going on is China's now more leaning towards Trump in the sense that it knows that its economy is struggling. If you want the proof of China's economy struggling, the only thing you need to go over and have a look at is, of course, oil. Oil's price has been going down, and China is the largest factory in the world, which effectively means it's one of the largest consumers of US oil. look at their economy. It's not doing anything because they're not consuming oil. Nothing's happening. If you go back to the time when we had COVID and what have you, when China just shut up shop, oil's prices were just going down and down and down. They weren't consuming it. And then when they announced that they were going to reopen everything, oil's price started to go up, which would give you an indication that China's economy is starting to grow. However, China's got big problems. It's got the problems with Japan. It's got the story with Taiwan and Japan. And we heard about some war dude in Japan's like, right, we need to start getting some missiles getting sorted out for this story with China and Taiwan. What are they doing? And I've said this before. If Japan and China do not make friends and they are not cool with each other, we're going to have ourselves a very big problem. And Trump's like the instigator. He wants China to buy soya, and he wants Japan to stop manipulating Forex in the sense of dollar yen, where they can buy a load of dollars. And he's just sat back saying, I'm cool. Sort it out amongst yourselves, Anyways, should we go and talk about crypto? What's going on in the crypto space, ladies and gentlemen? Look! BlackRock just deposited another 2,822 Bitcoin and 36,283 Ethereum to Coinbase Prime. Ladies and gentlemen, I mean, what's it saying? It's telling you that investors are like, okay, we've had our run with Bitcoin. Now we need to just go back to the legacy markets. We've taken a little bit too much risk, okay? But when you see Bitcoin trading like this, go over to Bitcoin's price action right now, you can see that it's being violated in the sense where it has been pulling back quite a bit. And we have seen a little bit of a pullback here. There is the possibility that Bitcoin could continue to mark lower, but we're waiting for key bouts of information to suggest as to whether or not we're getting rate cuts. If the market is truly in expectation that the cuts are going to happen, they're going to price it in. So there will naturally be movement to the upside for cryptocurrency, but will it be short-lived? And my expectation is that I do believe cryptocurrency is going to try and make a recovery, and it's all about how it holds inside of this range. Excuse me. Speaking of which, looking at where we are overall with some statistics on spot behavior, right here, you can see that we've seen a lot of interest in volume on Bitcoin over the last 24 hours, plus 35% in the spot market on Bitcoin, plus 26% on Ethereum. And obviously USDC volume is obviously relatively high. And then, of course, you got Solana at 22% and XR. What? More than in Solana? No. Just ignore that, ladies and gentlemen. That doesn't make sense. We'll just go back into the order flow. Anyways, so just looking at the order flow of Bitcoin, you can see that we have had an influx of bids. These guys are buying up. Like, look at this. 3.2 million was the initial amount, and they transacted 85,800. What is this telling you? It's telling you that we do have quite a bit of interest in participants paying attention to price, with the idea that if it comes down to a specific spot, it's going to trigger interest. What we need Bitcoin to do is hit a zone that is going to really encourage interest from investors. Because once it grabs that interest, quite frankly, the market will look for a recovery back up. But the problem we've got is the recovery might be short-lived, because you can see here that you have got quite a bit of offers coming into play. So these are participants that want to sell the Bitcoin on the move to the upside. Look at this area here, how you see Bitcoin's made a move to the downside and then it's recovered back up, okay? The problem that we've got is if the offers want to sell sooner rather than later, that of course is going to impact Bitcoin's longevity of price staying higher for longer. Now, when you look at Bitcoin's price action, something that I always talk about, which is the 5 and 13 EMA on the daily time frame, it's trading below it. The narrative is lower. The only next logical spot for Bitcoin to attack would, of course, be this green vector candle zone that sits at 76. People are coming out with some pretty interesting price projections, which are saying that Bitcoin's going to go down to 10K. They're going to go into 20K. Someone said 14K. And I'm like, give me your reason for it. And all they're saying is just because we need to come all the way back down to this range here. Why? Why do we need to come back down? It's not that we need to come back down, but we need to have an event that will force investors to get capitulated. And if investors are not capitulated already, then that's a good sign, because those same investors could look at Bitcoin's price and be like, okay, we got ourselves a discount. Your Bitcoin's doing fine at the 78. Your Bitcoin will be doing fine at around the 62 because you got to look at what had happened around those ranges. Bitcoin consolidated nicely, and then it consolidated nicely here, but for a shorter period of time. The longer Bitcoin consolidates for in a range, the bigger the intention is to try and either mark it up or down. But look at where we're going into. We're going into a cycle, which means that money's going to be cheaper. So when Bitcoin consolidates and keeps on going down before the event of interest rates being cut, the logic is that once we do get a rate cut, then once we then get the second cut after that, that's going to give Bitcoin the fuel to move higher. The market has to prepare itself. We go from expansion to contraction. Bitcoin has been expanding for such a long time. You need it to pull back a little bit, man. Like, let's be real. Do you want to keep buying Bitcoin at all-time highs? Yay or nay? Look at the total market cap, not Bitcoin chart. Yes, all right. Yeah, all right. All right, we got a clever D right here. I'm joking. Look, total market cap is 2.91 trillion. You want to look at market cap, you look at Nvidia. This is embarrassing for crypto. Embarrassing, okay? And now you've got a shocking supply of Bitcoin that's sat in this range here, okay, in this ETF. That is going to be completely compromising the idea of the market cap, okay? It's just money in, money out. That's all it is. And you've got to try and say to yourself, how do I position myself to accept that, yes, Bitcoin's going to go up, all right? Gone are the days, all right? I mean, some people are saying to me, Tina, the 4-year cycle is coming into play. Last week it wasn't. Last week it was altcoin season. This week it isn't. People are looking for a reason to buy. That's what it is. The only thing that I can suggest to you all is to line up all of the events that are due to happen. Okay, so let's just put things into perspective so you understand what we're talking about. Look at your gold. Why isn't gold going anywhere? How many of you are frustrated with gold's price action? I bet all of you are. All of a sudden, you've got this wonderful move to the upside, the anticipation of rate cuts, and then you get this pullback. Oh my God, it's going to go. Then all of a sudden, it's just stopped. And that is because no one knows where we are. No one knows where we are with the rates. Do you understand that this has been volatile? What on earth is that? How is the Fed watch been volatile? And when the volatility comes into play with rate swap traders, given that the chances of a rate cut were at 23% last week, now it's at 73%, you can see bright as day that the market is cooked. You can't have volatility on this. Usually when they bet on this, they're stuck with those bets because it builds the picture. They've got the data is released. Where are we with the rate cuts? Okay, what's the labor market suggesting? Oh, we're seeing a trend of positivity in the labor market. Unemployment rate is at 4.4% right now, but before it was at 4.2, 4.3%, lowest in 50 years. And investors can assume that for every non-farm payroll data comes out with the unemployment rate, they're having an expectation that it's going to sit at that same range. If the actual non-farm data itself comes out and shows that there is a trend in the number of jobs being offered, investors can then say, yeah, okay, we're going to get a rate cut. So the bets on this would be consistent. But last week it was fluctuating, which highlights clearly that investors don't have a clue where to put money. And that explains why gold is sat in a sideways range. Some of you might be like, it's getting ready for a breakout. Okay, cool. But if it's not doing what you want it to do and it's not giving you any significant price action respect, okay, it's because they don't know where we are with the rates. Why should I hold on to dollars when I can get the benefit of holding on to gold when the rates on the dollar are going to come down? And this is what they're waiting for. And when you start seeing gold trending upwards, if you were to just understand that when they hold gold, they're preparing for the next hedge. You've heard me say this before, and I sound like a wild parrot. But you go back to the last time gold consolidated like this, I said exactly the same thing. Go back and look at the live streams from around July, June, and August. You would have heard me said gold is getting ready for the next hedge so that they can build their positions and pricing the problem in the future. There's your pricing in of the problem in the future. There's your pricing in the anticipation of rate cuts, because gold is a safe haven, but also it's inverse to the interest rates, which effectively means why would investors hold on to dollars when they can earn on gold? Even though gold's a zero yielding asset, they can still earn more yield, okay, by holding on to gold. Now, because investors are scared of things, this is what you're going to see. And when you see gold consolidating sideways like this, it means that there is an anticipation that they're going to get ready to start marking up. Gold will clear its all-time high. It will come back to these levels. News announcements. U.S. Commerce Secretary Lutnick says Trump is weighing advanced Nvidia chip sales to China. Well. That should do something to the market right now. Hold on. Where's Nvidia? Where are you? There you go. We seeing any activity? Come on, Nvidia. Is the market open just yet? No, 3 minutes time. We should see some activity coming in. That's good news. That is interesting. We should see some movement. Here we go. We're starting to see some activity in the pre-market for Nvidia. Tino, you know the market is cooked when we start talking about the beverage curve. Yes, of course it's cooked, my friend. When we talk about the differences between the number of people unemployed and the number of jobs that are available, well, if you start to see more people unemployed and the number of jobs are available are less, well, ladies and gentlemen, you're not getting Santa for Christmas. You're not even getting the Grinch. You're going to get recession. When are we going to get one? When's the market going to be like, that was a good run, man. Yeah, baby. What's going on now? This thing's on steroids. It keeps getting the shot. Okay, keeps going and going. There's nothing consolidating. But this move down looks like it could be that. Okay? So don't lose your minds. Tino, total 3 Bitcoin USD is total 3 chart is breaking out with an inverted head and shoulders. Can you explain this? Daily or weekly big W? What does it mean for total 3 and alts? I'm going to say it again. All right. When you look at your altcoins, what do you see? You see that they've been smacked to death, right? There's been a violation on altcoins. All right. Then you say to yourself, right, I need to go get some money. I think we're at a discount. Okay, then. You start putting your hands in your pockets and you're like, oh, now, man, nothing's there. I mean, I've got great credit. You know, I'm not liquid enough. Let me go to my bank. Knock, Mr. Banker, you flipping banker. What's your rate? I want to borrow some money. Well, my friend, we're currently sat at 4% plus our rate on top of that. What you saying? Really? What, with the fact that your dollar right now is absolutely dead? There is zero appreciation. So that means I have to effectively put more dollars to work to use it to borrow and buy. No, I'm going to wait. I'll sit tight. I'm going to just do what I normally do. I'll just sit tight. Don't worry about it. That's your problem with altcoin season. No one wants to buy because money's not cheap. It's still expensive. You're in a big transition. When interest rates, when they give us the true path of interest rates, then we'll know where we stand. Here we go. Nvidia. Focus on interest rates. That's all you got to do. That's all you have to do. Nvidia's moving quite aggressively. So they're just getting the orders filled right now. NASDAQ doing some wild behavior right now for the brinks. It's very, very tricky right now. Quickly going over to Bitcoin. Just have a look at where we are with that. So Bitcoin's trying to hold out very well in this range. Ancient session sweep. Brinks box coming into some flavor. Come on, Bitcoin. Give me something. Give me something. Let me just quickly go over to this. This is just a free order flow platform. It's not free, but it's called tapesurf.com and just gives you the order flow only because it's just easy to navigate everything. Just gives you everything that you get with normal order flow, like no different to CoinAnk gives you the order flow as such. But, you know, it's just another order flow platform to save me opening ExoCharts because ExoCharts just violates the computer for me. But we're seeing some interest coming in. We've got some interest up here at 196 Bitcoin at 86,340, which is a good offer. But it does show a bit of liquidation as well. Here we go. So sweeping that bad boy. Looks like the market is liking the idea. The market open balance has come in with a plus 85 million for S&P, minus 16 million on NASDAQ. Dow is up 20 million and the Mag 7 collectively are plus 2 million. So you can see there's a bit of a mixed bag right there. Oh, hello, Bitcoin. They've cleared that zone, eat those liquidations, got some interesting behavior. By the bids and the offers, I'm looking right now. This is Ethereum on the right. We got Bitcoin on the left over here. So you can see that the bids are very well interested around the 83,000, 82,500. Ethereum seems to be moving. Ladies and gentlemen, Ethereum is in. We've got altcoin season, guys. In other words, even you're worrying about the total market cap for cryptocurrency or not, fundamentally, if the market is happy, then everything is happy. Okay? That's what you've got to understand. All right, Bitcoin's doing really well right now. Nice little green vector candle. So we're going to hope that it's going to sustain itself inside of this range. USDT is coming into play with a bit of a sharp move down. But you've got to understand with USDT dominance itself, you've got to look at this chart from a psychological point of view. Forget the fact that it is at a certain level. In other words, this is at 6.317%. Platinum members will know we've projected these ranges and they've completely cleared these zones. They've made the move to the upside. They've taken out this range. And what's more important is we are now engaging in a psychology of, is it cheap enough for me? That's what's going on now. Is it worth me taking out my dollars and getting them out of the yield that I've earned from the rally to the upside in yield? Is it worth me now taking those dollars and then putting them to work and buying Bitcoin? And according to what we're witnessing right now, that could be something that could be actually happening as we see the market start to make some movement to the upside. Hopefully it sustains itself. But of course, ladies and gentlemen, make sure you protect yourselves. Tino, look at the Bitcoin dominance. Alts are doing well. Forgive me. Here we go. Yeah, alts are doing all right. 58. Okay, that's cool for me. But remember, people make the mistake of thinking that alts are going to go up because of the Bitcoin dominance. Yes, that is what the practice was before, okay? But people need a reason to buy. And when they see the stock market bleeding out and they see that the ETF is offloading like this, and then you've got things like this that are still killing it. Let's have a look at Zcash for a second. Just put it into perspective. There we go. Where's that thing at? Right, doing great. This is doing great. In my honest opinion, it's consolidating. It's, if anything, it's the best performing crypto asset relative to the market conditions. Come on, you can't complain. This thing is retaining itself very, very well. So you're going to play, if you're going to play games with this one, just be careful when you're shorting it because the pullbacks will be very, very short going into it. My concern is the labor market. I'm advocating for a rate cut. This is the BS that we're dealing with, okay? Just keep that in mind. You want to answer the question to your altcoins going up or down? It's that, okay? He says rate cut, labor market. If one is bad, then it's good for the other. If one is good, it's bad for the other. That's the inconsistency of the marketplace, ladies and gentlemen. So please take that into consideration when you are trading Bitcoin. Are you behaving? Yes, you are. Come on, B. Come on, Bitcoin. What time are we on? Okay, then cool. Now, any questions? Got 3 minutes. Here we go. Where are we at with everything? Any trade? I did a little bit of trading today on my funded accounts because I've pulled out my money from my personal accounts, and I did some trading today on my funded accounts, which is okay. We're not going to complain about it, but we did $2,896 today, but we copied that across 5 accounts, so made about nearly $11,000 collectively on the accounts per se. But okay, like it's just fun. It's free money, okay? It's free money. So if I'm waiting for money to be withdrawn, I'm going to come over here, take a couple of stabs. We make money on it. We make money on it. If we don't, we don't. But we've done all right on these little express accounts. We're just going to try and grow these, and then happy days. Usually around Christmas time, there's a little bit of a slowdown in the marketplace because volume starts to get a little bit light. But that's why I'm playing on the funded accounts right now, just so that I can then prepare myself for the start of next year, because the Santa rally could be very interesting. It really could. I'm hoping that they actually do. I hope they don't cut the interest rates of Japan, but I believe they will. So anything that you're seeing happening from now up until that point, December the 19th, it's going to be interesting, I'm telling you now. You know, can we look at Circle? Think she's making a comeback? We can look at Circle. We can. You know what? I mentioned Circle, and I've mentioned so many other assets, and everyone focuses on this one. You've made bank on a lot of stocks that I've given you, just off quantum alone. 1,900% collectively off the stocks that I've mentioned, and that group of that sector of stocks. Come on, man. Circle is fine. Finished. I don't care what anyone says. Say whatever you want. Circle is fine, in my opinion. All right? You're playing a bigger picture here. It was listed 15 minutes ago, figuratively speaking. Give it a second. Coinbase did exactly the same, and that was the best thing that happened to cryptocurrency. It dropped down and then just shot back up. Sit tight with this, because the volume is still there, ladies and gentlemen. Okay? Multiple what? We don't want that. Anyways, with that being said, I'm going to talk about that. I'm going to talk about that later on. I have been very busy this weekend, ladies and gentlemen. I'm not going to lie. I'm doing a revamp of all the masterclass sessions, and I am near enough complete. Okay. I just got to do some tweaks on something, and that's going to be very, very interesting once they're all released. But it's all on the concepts of the hybrid system. And the longest one is an hour. The shortest one is 15 minutes, but they're within that frame. But hopefully you guys will enjoy that when they get sorted. But with that being said, ladies and gentlemen, have yourselves a wonderful day. Trade safely. Happy birthday to everyone, whoever birthday it is. Like, subscribe, follow us on all the wild social media platforms, and tag me so that when we get to 150,000 subscribers, I'm going to get the XRP tattoo. You're chatting wet. I ain't going to do such a thing. Forget that. I might do it. It depends. Anyways, mad love to you. Peace. I'm really not going to do that.